60% of people do not have a will.
What would happen if you died tomorrow? Martin Holdsworth is a lawyer, and he spent the last 20 years specialising in resolving inheritance disputes.
1 in 3 people are now relying, not hoping or expecting, but relying on that generational wealth coming through. Talk to your kids, talk to your parents. What about care costs? You know, how are we going to deal with that?
I like the idea of setting up some kind of like trust that then carries on for centuries. So in like 500 or 600 years, they're like living off the demo funds. Is this a thing?
And they'll be asking, who was this?
They'll know. They'll know. Like every time they access it, it'll be my face. Like, it was me. You specialise in disputes around inheritances. How busy are you at the minute?
We're very busy. So I've been doing this for 20 years as a lawyer, mainly about resolving disputes after people die, but it can be lifetime that's connected. So there are disputes about sometimes ashes, bodies, all kinds of stuff that we actually deal with. So anything you can imagine that happens in a life with a family getting worse on a death, those disputes that roll out of that is what we do. So I've got a firm I founded in 2017. So decided to just do that and nothing else. My firm doesn't do anything else other than resolving this kind of stuff. So we think the next 2 or 3 years, we're going to be 2 or 3 times the size we are.
The great wealth transfer, as they call it, is probably something that you look at as an opportunity in a sense, because there's going to be a lot of money flowing down.
Absolutely right. In fact, I go so far as to say, yes, families have always fought, but the combination or the perfect storm, if you like, of certain factors is going to make claims just carry on and on and on. And one of them is the intergenerational wealth transfer. As you say, the amount of money passing is greater than ever in history, never mind in the last 5-10 years. It's in history, this is the largest sum of money dropping from boomers and X's down to the next generation. So much so that people are now seeing it. And I think the biggest change for me is 1 in 3 people, as a survey done by Legal & General, 1 in 3 people are now relying, not hoping or expecting, but relying on that generational wealth coming through and then living their life on the basis of that landing. That's the big change. So that when it doesn't land, or what lands isn't as much as they thought it was going to be for a million different reasons, claims by siblings or care costs, whatever it is that they don't have a plan B very often because they've relied upon this life-changing sum landing. How often do we receive average amounts of estates of what, nearly £300,000? People don't receive those kind of volumes of money in their lifetime. So when it doesn't arrive, claims arrive. And
if you have a generation of people, maybe younger people, say our generation, millennials, that are not able to build wealth in traditional formats, like buying a house, they might look at it and go, that's when I do that, right? And then when it comes down the line and it's not enough, they start scrapping with each other.
Exactly right. Because they don't have plan B. That same survey then asks the next obvious question, well, what are you going to do if you don't get it? And 1 in 4 said, I'd have to bring a claim. Not, I'd look to see where the claim is and see if I can do something about it. Just, I would have to bring a claim. So what we see at our end is, as I say, we've got 20 lawyers strong, so we're busy, is that we get, over the last 7 years, we've had just over 8,000 inquiries coming into our office asking for support, help, guidance on that very situation.
Are you seeing them increasing every year, or was it? So it's getting more.
In fact, I read there was a report that came out on the sector just before Christmas that was saying that the number of law firms offering will writing provision has dropped for the first time in years. It's below 6,000 now. Whereas the number of law firms now offering contentious probate services since COVID, so since 2020, has gone up 36%. So that will give you an idea that people are...
Where the money's at.
Where the money's at. Well, and being trite about it, nobody fights about an estate that's got no money in it. So, but then most estates do have money in it.
And is the solution a will?
I think a will is a solution, and it's what's more important for me is not just the will, but what comes with it. It's the conversations. It's the conversations in life with the people who are going to be affected in death. I mean, in terms of not having a will, as you probably know, means if you die without one, you die what's called intestate. So you die without a will. And if that happens, then your estate is divided according to some rules called intestacy rules. They're rigid, they're old-fashioned, they don't recognise...
1837.
1837 is the Wills Act.
I was looking. That shocked me that basically that's still the law.
It's still the law. There's still some changes around the edges, but it's still good law. And in fact, the 1837 is what sets out how you even execute a will. You need 2 witnesses. You need to be able to sign in front of them, etc. That hasn't changed at all. And to put that into a timeline context, that's before you had stories written like Bleak House and Dickens. That's how old that is. 1837 is huge. The only other acts I can think of that does impinge a little bit is the Partnership Act. It came out in about 1870, I think, or 1890. But they are
basically
old.
About yesterday compared.
Yeah, it's incredible. And it hasn't moved because, and even then, the sort of the testamentary freedom is basically the big sort of guardian point that law is to provide in this country. So in the UK, you can leave what you want to who you want. So, and that's really enforced and looked after. So we don't want this idea of enforced heirship that you get in the continent. So in France or in Spain, you are forced to pass on to your children in certain shares and the like. Over here, you're not. You can leave what you want to who you want. And in fact, it wasn't until 1975 when they brought an act in that allowed anybody to try and vary the impact of what a will provided. So if a will provided for you, if you've been married 30 years and your spouse makes a will and leaves it to somebody else, their entire estate, prior to the Inheritance Acts that came out in 75, you couldn't do a thing about it.
So you couldn't argue with it if they left it to
really difficult.
The donkey sanctuary or whatever.
You would be left trying to find some way of saying that the will is invalid or some kind of equitable promise. It's really sort of hard cases to prove. Whereas now, since 1975, you can argue that reasonable financial provision should have been made for me, and it hasn't. And the court has the power to interfere and vary the effects of that original position.
But that doesn't that defeat the whole purpose of you writing a will? If I'm like, I want to leave it all to Damo, and then like they come and say you can't, then it's like, that's my will. They're like, you should have given it to your son, which obviously makes a lot of sense. But like, it's my money. If I want to give it to Damo, why can't I give it to Damo?
And
or if I don't like one of my kids and I like the other one, and this one stole my money and this one's cool, and I give it all to him, then they're like, oh no, you need to give some to him because you should have made provisions. I'm like, I don't like him.
You did it for a reason.
Yeah, I did it for a reason. I made my will for a reason. Like,
I had no idea you were going to sound like the Daily Mail, but you are absolutely right. Is that the Daily Mail does, any week you go in there, the Daily Mail will say, what is the point of doing a will? Because we can drive a whole, whatever I do, someone can make a claim to bring it in. Just to put that into context, 1975, let's rewind in time a little bit. So late 60s, early 70s, for the first time you had people getting divorced and getting remarried. It happened before, of course it did, but in terms of frequency and more people getting divorced, that's when it started. Why? Because in 73, there was an act that was brought out by a chap called Lord Denning who got involved and did it. And he provided powers and safeguards for mainly women so they could look to get recoveries even if they got divorced. Surprise, surprise, divorces started to go up. Fast forward in time, you're getting more and more blended families that are now dying. So you're in a situation where on the death, some people have been married twice, sometimes 3 times. They've got kids from either side. How are you leaving your money to each other? How are you leaving your money to your kids on both sides? So you got this kind of 1975, they decided that, look, you can't possibly allow a spouse to be left out. So the 1975 Act was a really good act. But of course, what's happened, like most laws, it gets tested, it gets pushed, and you get to that situation that you described. So I can say as a lawyer, absolutely, you can leave what you want to who you want. Donkey sanctuary, 1 of your kids, 2 of your kids, 3 of your kids, 5 of your mistresses, whatever, and it happens. We've seen it all. So that happens. But the court will interfere only if it's certain categories of people, spouses, cohabitees, financially dependent people and children to you. And it will ask the question, should you have made reasonable financial provision for you? And no provision can be reasonable. It's just it will decide on a case-by-case basis. But there's no doubt there's a movement, there's a shift across to giving money to children, even if you try and cut them out. There's a case this week, actually, you probably saw it, Daily Mail, you probably will have seen it, won't you? So the Daily Mail.
This is brilliant.
It's a bit too early to have a go at your house, isn't it?
No,
keep going. 125,000 quid is what she got out of an estate worth 1.3 million. And she was described as a useless, as you have, useless, horrible, not engaged, never came to see me, all the usual allegations. And yet still, the court took a view that she should get something.
That
would grind my gears.
Yeah, because especially if they're you get a lot of situations whereby one child has to do all of the care and all of the looking after, and the other person's living in Australia and doesn't even call the parent. And then they come back in and go, right, where's my slice?
After not talking to their parents for like 7 years. And they're like, oh, I'm here now.
I agree entirely. And you can imagine, and unfortunately, the best witnesses to try and help you fix that are always dead.
Yeah.
You know, the person I want to talk to and go, why, isn't here.
Can they put that in their will? The reason why is because
and in fact, they're actually encouraged to do that. Yeah. They're encouraged to do that.
I need to update my will.
Probably not
call some people out. I know you're here. I just want you to know. I think you're a twat.
I think you can put it.
I never liked you.
Can I suggest that because a will becomes a public document, you put that in a side letter, which is what most people do. Is
I want it in the Daily Mail.
When he was in public.
I think the harshest one I've ever read was a will that it was a really simple clause, and it just simply said, I give this to my son, I give this to my other son, I give as a measure of the time and affection she has shown me, my daughter £1.
Wow.
As a measure of the time and affection she showed me.
It was like, and it was so simple, and you just sat there in this will, and you got to went,
and who reads that out to?
Well, the person, whoever's got the will named as executor, will get it. So they have the power until they obtain a grant of probate, which is just a process that you go to get basically a certificate from the probate registry that says, yes, you are the named executor. Yes, you have the power to be able to administer this estate. At that point, a will in the UK becomes a public document. So you can gain access to, and you can get anybody's will, in fact. So you can go and pay your £2 or £3 at the registry, get a copy and have a look at it. And in fact, this is why probate registries and all these rules came about back in the 1800s. No one had any assets to pass to anybody else, but they did it because they were so nosy about what other people had and what they were doing in the lifestyles that this is what they brought about in the late 1800s. So then that converted into more people having money, and it worked quite well. But so you can have a look. You can have a look. So they will then find out because they'll see it.
One of the goals of personal finance is to take the money that we earn and to put it to work, so that one day we can hopefully stop working. But I often speak to company owners who have got plenty of money, quite large sums of cash, just sat in their business bank account doing absolutely nothing. So why not at least put that money to work? This is why I'm happy that we're working with Tide. They offer an instant access saver, which I use as an account to generate interest on excess money for things like tax savings. New members can earn up to 4.38% AER variable for 6 months. I say up to because it depends on how much you deposit in your account. And the more you save, the higher the rate. You can get this deal, plus you can get £100 cash back if you fund your Tide Instant Saver account with £5,000 in the first 30 days, if you use code MAKINGMONEY. T's and C's apply. The code is MAKINGMONEY, all one word, or you can use the link in the description where you'll also find all of the offer and the full terms. The variable rate is correct as of April 1st, 2025. Before we get into the juicy details of the disputes, this is a personal finance kind of podcast, so I want to talk about the will process.
Yeah.
Do you know how many people have a will?
I can tell you as a percentage. I can tell you that 60% of people do not have a will.
Do you have a will?
So you kind of, it's...
The only will I know is our producer over there. You right, Will?
Where there's a will, there's a way.
Where there's a will, well, we kind of say where there's a will, there's a claim, but I but I don't want to be known as a hearse chaser. I'm not chasing hearses. Yeah, I'm not. No, I've just given you a tagline starting now. Please don't do that. No, I'm not doing that. So 60% of people. I'll stand in a room and lecture to a group of lawyers and say how many are in here have got a will, and not more than 60% will stand up, and you're getting it for nothing. And the reason why that doesn't happen is because people. I won't ask you why you haven't done a will, but I'll simply give some reasons and you can nod. The usual reason is because I don't think I've got enough, or I haven't got time, or I'm too busy to die, or there are all those kind of reasons.
I'm too busy and I don't have time.
Yeah, you don't, and it's going to cost me some money, which actually I don't really want. It amazes me that people work so hard to gather, gain, provide, put things together, and then won't spend a little bit of money to preserve it for the next generation. And it's your kids, ultimately, or keeping your kids out, as we've said. If you don't do it, the intestacy rules will kick in. If you are not married, your cohabitee will not get anything.
What are those?
I got it.
Intestinal rules?
Yeah, intestacy rules.
Intestacy.
Yeah. It's got nothing to do with your stomach, I promise. It might make you sick in the stomach, because intestacy is where there's no will. Intestacy is a set of rules that's set down by the government, so it's in statute, and it will tell you where your property, where your assets will go. So it will say if you are married, your wife will get X. If you've got kids as well, your kids will get a share that's split between them, and then the rest goes back to your wife. The problem with the intestacy rules is that they're not modern, they haven't been brought up to date. So they don't even believe or see or treat either cohabitees or children of the family. So you can imagine these blended families, lots of them. If you're not of the blood, then you are ignored by the intestacy rules. Yeah. So you get this ridiculous position where you can have husband and wife married, 3 kids, husband dies, tragically, and doesn't have to be tragically, but if he dies, and then the wife is left with receiving an amount of money coming through, an allowance that she will get. So she'll get the first lump, and then the rest of it's split between the kids. But if the kids are less than 18 years of age, it has to be held on trust for them. Mm-hmm. But what happens if some of these assets she needs, and that she wants to sell a house and downsize, but actually half of the house is now the kids?
So and then when they turn 18, they blow it all on like a Peugeot 306 and a Ibiza or something.
Yeah, absolutely. Good car.
I'm with my cousins. They the uncle wanted to sell the house, and then the youngest didn't want to sell the house, and they were arguing about, we need to sell it. No, we don't want to sell it. And so, they gone to dispute that way.
And the problem is you've got a really good, nice family together, all get on. But suddenly these kids need, because you want to sell the house, because they're under 18, they can't sign a contract, they can't do anything. So they need to have litigation friends appointed. If you've got 3 kids, that's 3 separate lawyers potentially. A lawyer for the mother, a lawyer for the estate. So if you're not then you've got to go to court to get a court approval of the settlement. So from a situation where a will might cost you between 250 and $2,500, depending how complicated it is you'll find that it will end up costing them, 10 grand minimum to actually get something done that they all agree about.
Plus the stress. Plus like this awful period of your husband's died and then you're in court for a year trying to get some
never
money
a vacuum.
Just so you can feed the kids. I recently did my will, and like what I will say to people listening is I found it like really life affirming. I found it a lovely experience. You think it's negative, but then you sit down and you go, here's all the things I have and here's who I want them to go to. And now I know that like the people I love are looked after, and if I die, they'll know I love them. And like, you kind of just feel like a bit of a legend. And every time I see my son, I'm like, you don't even know how sorted you are, mate. If I die, do you know what I mean? It kind of makes you feel like complete.
I think you have to remember that you will, I always view it this way, is your will is your last monologue.
Yeah.
It's the last time you speak from the grave, potentially. You're actually saying, I've weighed and measured everybody. And you're a twat. And you're
melt. Cry lunch. Legend.
In, out. But there's no right of redress. That's the sad thing about it, is that having said you're worth £1, you can't respond.
I'm out of here, peace.
I'm gone.
That ultimate mic drop.
And it is, which is why it's really difficult, because actually a will's done at a point in time. And of course as I'm sure it will, your finances will get better, and life changes and new kids and whatever goes in. So you need to keep updating as well. I mean, in a way, I'm not here to sell wills at all, but I do think doing a will promotes all the right conversations to have financially, but if you're seeing us, by the time you're seeing sort of my firm, is that you're already dead, and it's your kids that are having to try and resolve the problem that's now facing
the stress away from them. I just think for me, I'm a very optimistic person, so maybe I'm just not going to die. No, I think like it's scary writing a will. Like you have to accept that you're going to die, and this is what you're going to do when you die. So for me, it's just like daunting. And the same with like talking to your parents about it. Just the whole, you don't want to, I'm like a guy that like doesn't, my mum says ostrich, head in the sand, and you're like, don't worry, no one can see me. So it's just kind of like pushing it away. I'll do it later, I'll do it later.
Well, there's a place for that, isn't there? Because that part of your personality means that you will take risks, you will do things that you want to do. And I think that works really well. But I do think you need to sort something out. I mean, it's a fairly obvious thing to say, but absolutely all right.
Yeah, in my family I know exactly what I'm getting from my mom. I'm the executor of the will as well, I believe. Yeah. So I had to sign it all, and I dish it out amongst my siblings if things go wrong. And then my nan, my mom's mom, used to call us and be like, "Oh, your inheritance is looking good. The house prices have gone up." And I was like 12.
Yeah.
I knew exactly what she left. She left me £1,000, but my mom got like a third of the house. So within my family, it's always like, this is what you're getting, and this is when. So I kind of.
You grew up with
very open.
Yeah,
I think that was instilled in my nan.
It's rare.
Yeah,
I was about to say that's got to be rare.
And what's probably even more rare is that she's doing it from a good place, because what we see, obviously, we just see disputes, but what we see is, well, you're out. If you don't come around and make my dinner, you're out. It's very negative kind of. Whereas actually, she seems to be sort of telling you this is what's coming.
And the conversation that goes backwards is, "Mom, spend your money."
Yeah.
Like I'm like the house is enough.
Yeah.
Like if you want to leave us something, and I've got a younger sister who's, like she's 15, so she's significantly younger than me. So she's going to need more support because she'll be in her early 20s, late 20s, maybe. I don't know. Like I'm going to be like 50, 60. She might be 20s, 30s, if that was to happen. So I'm like, the house is probably enough. Your pensions and that, go blow them.
Yeah.
And we can have that conversation.
Yeah, but that's to be honest, that's a lovely, Damien. I have to say that's a lovely position to find yourself in. Your family, credit to your family for doing that, because that is quite rare. I mean, what we find is, as a general observation, is we all have different relationships with our own parents, because we're at different ages. Your parents are at different stages of their own financial kind of journeys. They'll have more, they'll have less. Some comes in, some comes out. And the problem is that with those kind of relationships, when it comes to death and dividing numbers, assets equally. So, for example, if you got 3 siblings, 3 kids, and they get a third each of somebody's estate, one or two of those will probably have had some lifetime gifts from parents earlier on. Invariably for house deposit, we were talking before about the cost of that. You can't afford to do it. Parents are now taking out equity release loans, as you know, to release funds through. And in fact, my understanding of speaking with a couple of them is 50% of equity release loans are being transferred and passed straight on to their kids to help fund some kind of life event, whether it's paying off divorce fees or
Bank of Mum and Dad.
Yeah, Bank of Mum and Dad, essentially. And the Bank of Mum and Dad, Eliza Philby, her book, excellent, by the way, but is really, really good book, is that deals about everything in life, and we're plugging in the bits that happen on death, and it's exactly the same issues. Because we find with Bank of Mum and Dad is that, in fact, I'll tell you this, is that if a payment comes to you from your parents in life, we've seen on death at the other end how those payments are then disputed, even by good siblings. And they're disputed because, and just to follow the logic here, is that most parents will want to divide and share and treat their kids equally. Yeah, it's a given. So they'll try and keep a track of what they're giving and helping out to each of the different ages. Like yours is not so easy, because sometimes they've got more.
They're better financial position to help my sister.
Yeah.
My mum was a single parent with me. Now they got money now, so they're going to buy her a house or whatever.
And Bank of Mum and Dad is invariably not just cash. It could be a house. I mean, I'm going to provide you. You don't have to worry about you can live here as long as you want type of thing. So that kind of grows. So you've got this kind of, I want to treat my kids equally. You've then got all the kids having different relationships and timing, as you've just described with you, within those families. And they know that. So when death comes and they look back, as they do on an estate administration, because you have to look back to see if there's any gifts being given, because for 7 years, if you die within 7 years of death, there's some tax to pay on it, it comes back into the estate. So you're going to get told, invariably it might be the first time you hear that your brother or sister has received a lump sum from parents. You might have been suspicious, but they've done it. Your head tells you my parents want to treat us all equally. My siblings now saying, yeah, but that was 10 years ago, it's 50 grand. I don't want to include that. Well, you have to. They don't want to add it back in. And we get disputes then arguing about whether it's a gift or it's a loan or it should be taken into account. And then you're into the evidence. Again, best witnesses are dead because the parents are no longer here. And they will run. And if that person happens to be in the 1 in 3 relying on inheritance and they've just been told they're not going to get as much, they'll start to look elsewhere about what else I can do to bump up the estate. So you get even good families doing this. And in fact, lifetime gifts, both to protect, on this podcast for parents and people receiving it, we've identified 21 different types of claims or problems that arise from a lifetime gift of a lump sum of money that can occur on death. And that extends from, and we fixed it because we've created a Bank of Mum and Dad app, but the app basically asks you a load of scenario questions. So it asks you things like, if you're giving some money for your child, do you want to ring fence it in case of bankruptcy or divorce? Or it just asks normal conversational questions. And you go, well, yeah, why would I not? Well, if you're going to do that, what you need to do then is create a lifetime trust, or you need to do a will, and it then tells you what you need to do. And I think this is about the will drafting, is that don't see it as this is what happens on my death. See it as this is me estate planning through from now into death and beyond. How do I manage their lifestyles for them?
With this whole like lifetime gift, if your parents, for example, like my parents bought me a nice little Peugeot when I was 17, I think.
Yeah.
Would that, like, things that they look after you when you're a kid, or like, does that count as a lifetime gift, like buying you your first car?
No,
or does it have to be within a certain time?
No, I don't think it is. Does have to be in a certain, because I'm talking now about the viewpoints of children with their parents dead and there's a pot in front of them.
So if it gets tit for tat, where they're like, they bought you that car when you were 17, and that's worth $5,000.
In fact, I can give you the best example I've got from that is that normally when disputes run, we try and settle them through mediation. So let's get these parties together, get a trained mediator in, and you put the two parties, two brothers in the particular case I'm thinking of, in two separate rooms, and the mediator sort of shuffles like Henry Kissinger backwards and forwards to try and get a deal. Lawyers sat in both ends trying to calm them down, work them up, whatever it is to try and get a deal. We had two brothers, and it was a very straightforward estate. There was arguments about lifetime payments, just as I've been describing to you. Wasn't much. And in fact, both lawyers, I was in one room as a lawyer in the other room, trying to understand what the hell was going on. Why were these two brothers, they wouldn't even move towards each other. Really hostile, really aggressive. Very, very rare. I can count on one hand the number of times the mediator said, look, I'm going to get them in the same room and let's see what happens. So we brought them into the same room, and the mediator just said to the pair of them, what's going on? What is it? And it was quiet for about 5 minutes. And then one of the brothers jumped up, pointed at the other one and says, you don't understand. You got the red bike. I had to have the yellow one.
You're joking.
No.
Wow.
Bicycle.
Some deep child issues there.
And lawyers were going, first thing they were doing is, I'm seeing that on the disclosure sheet. Where's that? And then the second thing is, when?
Then it clicked.
They were
like
9.
Some childhood stuff.
And
They were 9. And then the brother stood up and the other brother went, but I wanted the yellow one.
Oh,
you're joking.
No,
he wanted
I wanted the yellow one. And suddenly it was sort of hairs, everybody's backs of the necks all stood up, and we're like, 10 minutes later, we were outside and we carved up a deal in 30 minutes.
And they went for a beer afterwards.
And that's power of mediation, to be honest. You couldn't get that in a court. But in a mediation, he felt brave enough to do it. But it demonstrates to me just how deep this stuff goes.
He's carried that his whole life. Like that, like favoritism, right. Probably resented his brother his whole time.
And as a receiving party, as a child, you tend to look at money as a measure of love, invariably.
Yeah.
So if my sister gets 2/3 of what I get, then it means my parents loved her 2/3 more than they love me, which sounds daft, but actually, you've got no one to ask and look for reassurance. Again, they're not here. Is that true? It feels like it's true.
It does. Yeah, it feels like it happened to me at Christmas. My brother and sister got like one more present than me, and I got really upset. I was trying not to because it's Christmas, it's about Jesus. I did those.
I didn't get any presents.
You buy yourself a present, mate. I need a present. Because Christmas brings out the child in you. So like we're all there, family. We've had a big lunch with like our cousins and stuff, and then it's time to open the present. All our cousins left. It's just me and my siblings and my partner and my kid. And then we're opening presents. I'm like looking around. I'm like, where's my second present? Like they both got 2, and then my mum, I didn't say anything, but she could see I was like, obviously, like my face is very expressive. Yeah. So she's like, my fiance is like, you look really like down. So I was like, oh crap. So I like tried to cheer up, and then my mum, like when I left, she wrote me a message. She's like, I love you so much. Blah blah. She's like, your son got presents, and so did your fiance. So that counts as presents for you. And I was like, oh, I didn't think about it like that. So I can see like how people get emotional about these things, because you're like, I'm meant to be the favorite child, and they both got 2 presents. So I've only got 1. She's like, but your fiance and your kid also got presents. So like we actually got you like 5 presents. And I was like, See, so like I can understand people taking this to the.
I can't believe what I'm hearing. Child.
Do you know, I have to say,
I love Christmas. I don't care what you say.
You love presents.
I do love presents.
I've got two things to say, really. One is that's just like Harry Potter and Dudley. When Dudley does that, he goes, where's my 37th present? That's important. But point number 2, I could not describe more beautifully than you just have the actual impact of a will. And I leave you 1 present, I leave them 2. Yeah. You're sitting there going, where's my other one? And the only reason why you were okay about it eventually is because your mum told you.
Yeah,
she said, that's not a measure. Yeah. This is why I've done it.
The message was better than the present.
Absolutely right.
But if they're gone, you don't get that message.
Exactly right.
Well, that's why you need to leave the message in the will, right? You need to say, for my eldest son, you've been so financially successful that I think it's fair that you don't get the most or whatever. Like,
So what we've tried to do with the Bank Mum and Dad idea is to say that we recognise that people aren't going to do a will every time they give a lifetime gift. So let's do a little memorandum of understanding, something that's produced that explains, like your mum did, explains what and why and how it should be taken into account. So that then passes on. So the explanation will be the combined value of you, your child and your partner's presence is the same as the other two, and that's the way it should be. Yeah. And if it's not, equalise it. Mm-hmm. And those are the kind of conversations to have. And you know, pulling it back again a little bit to the finance industry is that anybody managing wealth these days, so any of the big investment companies, anybody else, are recognising that with the size of the intergenerational wealth transfer, and the fact that none of them know the next generation down, they only know those holding the actual funds now, is that this money is passing and there are two massive black holes. You know, there is one that is a hole that says divorce. There is another one that says death. And those two are the places where the finances drop into that they don't know where they go and where they lead to. So this 10 years ago, I've been saying this, but 5 years ago, they started to twig, I think. And no surprise, if you look at the M&A activity from last year, is you've got people like, you know, Octopus Money acquired, now bearing in mind that what that site does, but Octopus Money has acquired Amicable, which is a online, very clever divorce law firm doing stuff online and helping people, but actually connecting the next generation down. So you'll find that will happen more and more, is that people will be acquiring things that allow them to follow the money down these black holes into.
And when you say a black hole, do you mean that, like, I pass money to my son dies, it then goes to his wife and falls out of my family?
It can be that, or it could be, but literally your funds are under management. And you have a contract with your financial advisor or whoever's, you know, some portfolio that you're working with. That portfolio know you. You'd have a financial advisor, wealth advisor coming to you, sort of sitting down and saying, okay, we're going to put in high risk, low risk, whatever it is. When you die, the notifications come through. 6 months later, there'll be a grant of probate, and then invariably they'll be cashing all those policies, all those investments in, and then dividing it by 3, 4, 5, wherever it goes. If you don't know where the 3, 4, 5 is, you just lost the entire portfolio of investment money. It's gone. And most IFAs will not ask the question usually of, can you introduce me? It's a simple answer, isn't it? Can you introduce me to the next generation down? So what we're trying to do, again, Vanta Ad, is get those introductions done. Have the kind of relationship that you describe, is to be able to talk to your kids, talk to your parents, sit down and say, this money's coming through. What about care costs? You know, how are we going to deal with that? Are we going to try and avoid that if we can, or is it something that's right and we should be paying for?
One of the worst things that I see in my world is scammers who pretend to be me or the podcast and then try and get money out of people who follow us. And sadly, these scammers are getting better and better by the day, which is one of the reasons that we're really happy that we're partnering up with Vanta, who help businesses be secure and then prove that they're secure. Vanta automates compliance for stuff like GDPR, ISO 27001, SOC 2 and more, helping businesses build customer trust. The beauty of Vanta is they save companies a lot of time and money, because proving you're secure without them really is an enormous faff. It can take months of work and form filling. Over 9,000 companies like Atlassian, Flow Health and Cora use Vanta to manage their risk and prove their security in real time. If you need to prove that your business is secure and compliant, you can get $1,000 off by going to vanta.com/makingmoney. I've left a link in the description for you.
How big is the care component in terms of, like, when you come to the disputes and the debates? How much is care impacting, like, final pots and what people get? And
impact. I mean, there's no doubt about it. It's really expensive, isn't it? Any care costs are phenomenally expensive. So you will find, leaving aside whether you think it's right that we should be paying for our own care, but it does have a bit like equity release. You know, whatever you think about equity release, it's still an expensive way of borrowing money. And both of those have a massive impact. Again, it eats into this idea that what people are going to receive or expect or rely is going to be less than what they thought it was going to be. And I think, again, a stat came out saying that the average amount that the average beneficiary thinks they're going to get is £104,000. So that's the average. What they actually receive is about 52. So there's a disconnect between what they think they're going to get and what they're actually going to get. So again, that feeds into this problem of, well, what are we going to do then? You know, I've got 50,000 less. Care costs start to eat into that.
750 quid a week.
Yeah.
You know, like
easy.
it eats through that in no time.
And if you have disputes, then the legal costs are going to eat into that as well.
On all sides.
Yeah.
Because invariably, you tend to, trials are quite rare. Daily Mail obviously picks them all, but trials are rare. You know, you tend to resolve, most lawyers doing this kind of work would have an ability to be able to get it over the line. But I do think that the amount of costs involved are high. You know, you think about 4 parties in a dispute, 2 siblings, an estate, and then a warring party, is that you've got 4 sets of lawyers' fees, haven't you? Even at 250 quid an hour, that's £1,000 every hour.
And it's going to take more than an hour.
Yeah.
Oh, yeah.
So what we've tried to do is pick off at the death end stuff that's expensive for people to engage in disputes about and find a way to harness legal tech to do it. So we created something called I Divide, which is a perceived fairness algorithm. So if any of your listeners have got
You're a coder by...
I'm maths, physics, computer science, A-levels. I used to
Just
code.
for context as to why...
Yeah, a little bit of science, So I enjoy my numbers and my coding, so I enjoy the tech. So, and although when I was coding, it was BASIC and Pascal and COBOL, so it was like a lot different from it is now. So it was... it was a clever way of making sure that if there's a known number of items and a known group of people all arguing about it. So if you've got beneficiaries arguing about photographs invariably, or medals, or Welsh dresses, whatever it is that this thing will take you through and give you a fair distribution for 25 quid, basically. So it'll take everybody, instead of paying 4 sets of lawyers, 250 quid an hour, this is something that will make that happen.
How would it work that out?
It's got at its heart, it's got a perceived fairness algorithm that's been built by a maths professor far brighter than me. So it works. So it takes you through a series of bidding rounds, and it doesn't just simply add up who's bid the most for each item. It relates the bidding to each other. I don't even pretend to understand it. What I do know is the outputs work. Every time we ask them, is this a fair distribution? Everybody says, yeah. Oh, okay.
Does that mean AI is going to take over in the future and just
I think AI
sort it out really quickly? You get 50 grand, you get £10, you get quid latest.
Yes. I think we're looking at AI on adult claims, on financial, sort of, I haven't got enough, I want to bring some more, but you're financially independent. So you shouldn't be able to bring it. It runs against that bad child again. And trying to assess that, the merits, AI is doing that. So we're using AI on the fringes of stuff.
You could go through their social medias and go back and go, you've not engaged with this individual in years. So, that tells you a story, doesn't it? And AI can farm that quite quickly.
Oh, we've used, social media is hilarious, because the number of claims we've had where we can't afford, we can't do this, we can't do the other. And then you go to social media and download it. Yeah, literally. you download it and you go, well, you said, shall we have a look at our witness statement from the social media company? So out it goes.
But the one thing that's clear to me, though, from this conversation is, like, have a will where you say in the will, I want this person to have this and this is why. Yeah. And also have a conversation with people while you're alive. Yeah. How does, I can go to my mum and go, what's the score with the will? Tremaine would probably get a slap round the head if it, I
would just feel so awkward.
Yeah. Is that what it is? Would your mum want to talk about it? Or would she say it's inappropriate, none of your business?
She wouldn't say it's inappropriate. She would just be like, I feel, maybe this is my shift my shoulder. I think she'd just be like, you just want me for my money. Yeah. I don't know. I feel like she would be like, why are you asking me? Like,
it's really hard.
So I don't want to imagine her not being in this. So I don't want to be like, when you're not here, how much money do I get? It's kind of like it's a weird one.
Yeah, but you could be like,
it's an awkward conversation.
I'm the kind of child that cries if I get one less present than everyone else.
So that's a good idea. I'm like, so do you want to?
Why don't you just send this episode?
Just send it this episode and like little smiley emoji, like a money bag emoji.
I have to say to you, that's the most beautiful example I've ever had. And I'll be using that myself.
I promise.
It's a situation. Let's move it into. But that conversation is excruciating at times. It's. I sound like I'm grasping. I sound like I'm wishing you dead. It sounds like I don't care. It sounds like I just want to know how you're going to divvy it up.
And they have financial obligations now. They've got 3 kids. They just moved house. Like, they downsized a little bit. They might move to the countryside. So they don't know what they're doing. They got rid of their mortgage. Now they're renting. So I'm like, I don't know what situation they're in.
And in a way, it's it's not your business to know.
No.
Yeah.
You know, these are individuals.
Especially with our parents, where they've got a lot of life in them.
Yeah.
You know, they're not like 85.
Yeah.
You know, they're
very
still,
active
they're you know, they're like
Agreed.
the primes of their lives.
Yeah,
my mom and stepdad are in great condition. Do you know what I mean?
My parents always jumping on a plane to like here and there, so like they're always
Yeah.
going on holiday or going on business trips, so they're still like
It's
very
like one
active.
foot in the grave, isn't it? Like,
Yeah.
or kind of like you've got...
The way to do it, and the way we try, most people do will or estate planning when they've had some smell, taste, sight of mortality. You know, that's when people do a will, is a friend dies or something happens to somebody that they can relate to, and then suddenly they see the harm and they go, well, actually, I don't want that. Suddenly it's, I don't want to do that to my kids, so therefore I'm going to do it. When you're young, and your kids are under 18, it's an easy decision because you're asking yourself, who do I want to look after the kids if I all die? You know, that will get people to do a will. But like the parents that you're describing, you know, you're all grown-ass men, you know, you don't have to worry about that. But so the only way to do it, in my view, is to sort of tangentially a little bit, which is not to say, can we talk about the money and all the rest of it, but is to say, did you know? And try and introduce some kind of knowledge or awareness in a way that suggests, nudges, and it might be about tax. It might be about, you know, something that a joint saving that will work. And did you know that? And whilst you're looking at that, let me give the information. And I think empowering you not to have the conversation, but to pass something on to your parents and say, this is really quite interesting. I just thought you should read it. You know, even the Inheritocracy book, quite frankly, is read it, because actually it will talk about the bank of mum and dad and how that works. I think I've seen one case recently, and it's the first time I've seen it creep in, where parents have paid children, overpaid because they were in need, left themselves short, asked for the money back, not got it back, and are now suing
the kids
to repay the money back in again.
Money's so dirty, isn't it? It's just
like,
so filthy.
Yeah, I
We
mean,
all love it, but it's just so filthy. Like, it changes people so much.
Yeah, and again, it's expectations of life. In fact, just on one particular, I'm thinking about another case that'll flood into my head now. One particular case, this is 15 years ago. This is the first time I ever saw signs of people relying on an inheritance in the future to the point where they can't not have it. And it was a chap who died with two daughters, left £3 million. It was a decent sized estate. One daughter had married and was financially very well off in her own right. She didn't work, but her husband was very wealthy. The other sister was married to an accountant, and he had managed to get himself bankrupt, so they were a little struggling. The daughter, the will, didn't provide for either of them. It all went to charity. So one daughter said, well, that's great. That's lovely, Dad. It's gone to a hospital, as it happens. The other daughter says, well, hang on a minute. I haven't got anything. I thought I was going to get something through. I knew she was okay, so I thought I was going to be getting it all. I got a letter of claim from a very large law firm in London. And I remember this 15 years ago, I was reading it, and it started off by saying, it was about 8 pages long, started off by saying, I anticipated, I expected, I relied on this money coming through, and I lived accordingly, basically, is what she was saying. So I did this, I did that, I did the other, and now I'm sure, and I've got this. And I was laughing through the first 4 pages. I got to page 5, and I'm thinking, oh my God. Page 6 and 7, I'm starting to see, if she's relied on that, and they've not sort of disavowed her of that kind of belief, does that create an obligation for them to make good on it? And actually, she brought a claim. But then she died of a brain hemorrhage. It never got to court.
Oh my God.
Savage end to the story. And that's the end of that.
And that was the end of that.
Well, there's a claim.
Yeah. There's
Next.
Yeah. So,
that was unexpected.
so one claim became 2. And so it kind of worked. So that's where it was. I have to say, but it was the first sign. I knew she'd have got home on it, is the truth. And that's what
You think she would have
I think she'd have got that because it was so clear. And this is the conversation piece with parents, is that clearly there were undertones. Parents invariably will want to try and help support their kids. What I would say to any of your listeners and followers and subscribers is to say, look, if you are receiving those payments, have a dialogue with your parents, try and codify it, try and get something from them, our best witness, that will say what the terms of that advance are. If for no other reason, it means that you can produce that further down the line if it then falls into a dispute.
I got maybe like a thought for you in your situation that might apply. Why don't you go to your parents and go, I'm writing my will, I would like your advice, and I would like you to witness it. And then you just at least open the dialogue around wills. You know, you sit, then you're at the table going like, how have you done yours? Or like, how have you thought about this? Or
just rip the Band-Aid off and do 2 in 1.
Well, you say like, you go to them, people love giving advice, don't they?
Yeah, of course.
And if you go to them going, I'm sure you've got a really well thought out will. I'm thinking about doing mine.
My dad will love that. He'll be like, yes, let's have a meeting.
That's what I mean. Bring a cigar and have a whiskey with him and like make it a nice event. How would you divvy it up?
Hypothetically.
Yeah, but I'm serious. That's a good way.
That's a good idea, though. Yeah, because
to come one, don't have too much to drink, otherwise the will be invalid. Is point number one. If you're not got testamentary capacity. The second thing is that just a variation of that. Which is one of the suggestions I was going to make is if you go to them and say, in all truth, I am doing my own will and I'm looking at how I provide for my child. Because I'm expecting I want to make sure that it doesn't all flood down to them. And if something happens to me and they suddenly get a lot of money they can't control, I want to make sure he gets it. But I need to do that. I need to make sure what you're doing so it dovetails. So it's not about you, it's about your child. He then doesn't have to, or is not at risk, because if you're leaving stuff to him, I need to make sure that we dovetail. Yeah. And I think if you get that bit right, then that's a conversation that's not even centered about you. It's about how do we look after him.
I like it.
And if you can do it that way, then that...
because
it's
if they've left a generous amount to him, you might be like...
it's real.
I can readjust what I'm doing.
And like, blended families.
Yeah.
Like, I've got... My partner has a son who, I'm a big part of his life. So there's provisions there. And obviously, your situation, there's other people in your life that you care about. And you might say like, well, if my kid's taken care of, maybe I can spread it about in the different areas. Yeah. Give a little bit back to Dama.
Then we get some cash back.
Yeah. Cash back deal.
Write me into the will.
Yeah.
£1 for Damo. Based on all the times he's made fun of me.
Yeah.
And $1 million for being a legend. There you go.
There you go.
One thing that comes to mind randomly then, not I'm going to do this to you, but do you remember the Harold Shipman case?
Yeah.
Where he was... Yeah, I'm a comfy with you. Everything to Damien. The best.
I'm more interested to see what the link might have been.
Yeah. No, that's what I was thinking. If he cussed me out, I'll just get it written in that way.
Yeah.
No, but Harold Shipman, the interesting thing there was he was coercing people to put him in the will, wasn't he? And then killing them.
Yeah.
And how was that not spotted through this process? How was that seen as normal?
There's two things. Is one, you need to know there's a crime that's been committed, first of all. Without any crime, it could be gifts given. I do see wills, and they can be challenged on the grounds that suddenly you get carers very often. So you'll get somehow somebody's isolated. The classic example is older person on their own, isolated away. Carer comes in, suddenly the carer's getting money and nobody else is. Yeah,
it's all going to my carer.
Yeah, because as a measure of everything they do for me. Yeah. And some of that might be genuine. Quite frankly, testamentary freedom. You should be able to give what you want to who you want. If someone's been in the house for 5 years, looked after me, and my kids never come round, why can't you?
Yeah.
But no surprise, the kids will probably challenge it and argue some kind of undue influence. The thing about Howard Shipman cases, things to remember is that there's something called a forfeiture rule. You're not allowed to benefit from a crime in relation to an inheritance. So if you murder your wife and under the rules of intestacy or her will, her estate comes to you, no, the forfeiture rule will step in. So like Shipman, as soon as he got convicted, steps in, and you're treated as if you're not in there at all.
So you've got to get away with it, basically.
You've got to get away with it, basically.
But weren't there lots of disputes from the children of these people at the time? Was that not like a sign early on? I don't know. Because it seemed like it all came out. It's always just killed hundreds of people potentially and been sucking up their wills.
I don't know I don't know individually the cases, but it seems to me that any circumstances in which somebody in a position of care and authority like a GP, and lawyers as well actually drafting the wills, if they are constantly named as beneficial, or even just once in your own family situation, I will be asking questions. And people will come to me, and at that stage we're saying, right, you must have unduly influenced that individual to do that, because there's no way they would have done that but for you doing what you did. So you're right, is that you can challenge as a parent coming through. I mean, one extreme example of this is, again, just before Christmas, there was a case that was heard about assisted suicide. So you imagine the forfeiture rule that says you can't receive victims of crime. This particular chap took his wife to Dignitas and was charged with assisting suicide.
He didn't get the will because it's a crime.
Forfeiture rule.
Didn't get anything.
Sad.
Well, but he took it to court, and the court decided that they would waive. They basically said the forfeiture was not going to apply to you in this particular case. Because he got it. So, but it's still crime. The point is, crime triggers forfeiture.
Where would the money go then? Is it to the intestacy rules, and it's like next down the line?
Yeah, which is bizarre because if you don't have children under the rules of intestacy, you then got to dig out the family tree. It might be going to second cousin twice removed, by the time you're looking at that.
And what's the situation where it ends up going to, say, like the Crown or whatever? It doesn't.
Yeah.
Or the government. When do the government?
Well, the Crown gets it actually. So if you can't find anybody all the way down the tree, then it will drop into the Crown's coffers.
Convenient.
Because they need a little bit more cash, don't they?
Yeah, and that's another industry because clearly. So the Crown will actually publish a list of all the estates they think are going to drop into their coffers.
They're like, here's the
that's my great uncle. Hold on, let me.
Oh, so you can come forward, and you get lots of people.
Well, think of yourself, and coming forward. But no, actually, what comes forward are all the heir hunters.
I was going to say, is there some fake IDs and some?
No, it's the heir hunters. So it's actually the companies, the businesses.
We're quick on the draw there.
Heir hunters. Heir hunters are. It's on TV, which is why I'm using that description. It was a series about it. But there are lots of companies who will help you track and trace beneficiaries. So what they will do, there's two different types, mainly. One that will say, I'm going to track and trace this one. I found you. You've got 2 million. You are the second cousin twice removed. You've got 2 million quid coming your way. But before I actually tell you how much you've got, I want you to sign this piece of paper that says I get 10%
of course.
or 20%.
And you're like, I'll give you that.
And you'll sign it. And you go,
sounds like an email scam.
Yeah.
Like you get like the Nigerian prince wants to give you $1 million quid.
You know what I mean? There's nothing wrong with Nigerian princes.
Got
one right here.
Yeah, thank you. There you go.
So that would... But there are two types. So you sign it and you get it, and then they get the money. We've run arguments successfely against that kind of campaign simply because we say what's called an unconscionable bargain. It's basically a bargain. I'm in a bargaining position where I know what that's worth. You don't.
Don't they have to tell them?
No, they don't know. So they could be 10 grand or it could be $1 million, and you just agreed 20% or 10 or 20%, and you don't know. And because you don't know, you're signing it.
If they didn't do it, you wouldn't know about it. So.
Yeah, that was the defence we got.
Yeah, it's a bit like the no.
I mean, would you rather have 80% of something or a whole load of nothing?
Yeah, again.
It's like no win, no fee.
Can't you just go, no thanks, I don't want to find out, and then call up like some government body and go, I'm that person?
Well, the other way you could do it, of course, is some companies will do it and they'll just charge for their time. So they'll say, we've got this, please sign this, we're going to charge for our time, this is how much it is, and this is how much you're going to get coming through. Thank you very much.
And they spend 3 years getting it to you and just bill you for their time.
We got solicitors on every side of this.
Yeah.
72 lawyers we get assigned to your case.
I can see I'm not going to convince you on this one. But it's we don't really get involved, but that's when it goes to Crown. So you will find that everybody will jump into that list and see if they can track and trace. And as you say, it's not a bad thing. Someone's getting money, better that than the Crown.
Yeah.
It's just the methodology sometimes.
Do you know how much kind of money
I should do, but I don't.
The Crown?
I don't. No. It won't be a small amount. It changes, obviously, courses.
Because this idea that
it'd be millions.
I was going to say the idea that someone dies completely alone with no one around them is probably not that rare. It's rare, but when you're talking about the population of the UK, there's probably a lot of people every year that are just.
Or baby boomers particularly. I think it will be less so as the years go by.
In the future.
Yeah, I think baby boomers. Think about emigration as well. Is that families have gone abroad. Some people stay. If you think about Australia, New Zealand, Canada, all the kind of Commonwealth countries where families have all my family's Canadian, they've all gone over there. So there's nothing left. There's one or two hanging around. And if you lose contact and there's no way of tracking and tracing them, you can see how you can die quite isolated at times. So
now people having less kids. So in the future there's going to be a lot of
a lot of people. No, that's true.
In the situations with the care, where there are people around and one person's living in Canada, but the other person cares for the person for 10 years until they die, and they ultimately protect the value of the estate, because if they weren't there caring, it would just get bled out by care homes. What's fair then?
It's a good question. And the short answer is whatever the particular judge that's hearing your claim will decide is.
I hope he's had a good lunch.
Yeah, or he's not had a bad experience with a carer. That joking aside, but that's ultimately, it's down to judges to actually make that call. And this was never better. demonstrated to me with a case called Eilert versus Mitson, which was a famous case. Daily Mail ran loads on it. Eilert was...
you love the Daily Mail,
I've had 2 headlines in the Daily Mail with cases I've had. One was, I think, man leaves his dinky toys to wife and nothing else, something like that. Anyway, they kind of ran with it. But in terms of where I am... Sorry.
Eilert versus Mitchell?
Yeah, Eilert versus Mitson. Thank you, is a case where £500,000 estate, she dies, had no relationship with one daughter. This one daughter was living in supported accommodation. She had a number of kids herself, didn't get on, and she got left nothing. So she left £500,000 all to a charity. She then got a barrister in Leeds, actually, a chap called John Collins, who's now dead, sadly. He took it on as a pro bono. So said, look, I'm going to try and get you something. Even though you're an adult and an independently financial, testamentary freedom, I'm going to give it a go. So he gave it a go, and he won at the court of first instance 50 grand for her. So 10%, he got 50 grand. Result, actually, considering it's not been done before. The problem is that he turned down an offer that was more than that before trial. And as a result, if you turn down an offer that you don't bid at trial, then you are responsible for the offerer's costs from the date of that offer all the way through to trial. So what happened is he gained 50 to lose about, I don't know how much it was, but it'll have been more than 50. No. So it was a negative number. So he had no choice but to appeal. Now, the lawyer that actually, the judge that made that judgment about 50 grand just looked at it and said, I think it seems about fair, 50 grand. So when it went to the next appeal court, both sides appealed. One appealed saying I need more because I'd not beaten the offer. The other one says, well, actually, we're going to say you shouldn't have had it in the first place. They did the second appeal first and rejected it and said it's discretion of the judge. That judge decides. Second appeal came through, and we as lawyers were expecting it to be struck out because nobody was getting these awards coming through. £180,000 was ordered. This judge decided that actually they needed 180 as reasonable financial provision. Again, comes back to this idea.
3 times, 4
how the hell
times,
would you know? That then gets appealed by the charities to the Supreme Court. And in fact, by this stage, it's televised. So we can all watch the Supreme Court dealing with it. That's how exciting my Saturday nights are. Watching that, and the same barrister run it, the pro bono guy, all the way through. He can be seen on the TV. And the Supreme Court turned around and said, 1, 180 is too much. 2, the original offer of £50,000 was fine. It was the discretion of the judge. We're not going to interfere with it. Back to the original order, 50 grand. It took 10 years. The legal costs involved, reportedly, over £1 million.
No.
To argue about a 50, and you were exactly back where you were at the beginning 10 years ago.
Well, you're negative.
So she got 50 grand. But apparently what happened with the costs is they became such an important point is that charities, and again, I think this is right, decided that they would fund it on both sides of costs because it was so important, because they were worried about losing money coming to them, I think, was the idea behind it.
Why did charities fund it? Because they want some kind of precedent of
I think, or not a precedent. So what they didn't want is charitable gifts, because some of the comments that were made in the first instance, the second, certainly the second court, is because there was no real connection between mum and charity, is that she just literally picked the charity out of a book because it could go anywhere as long as it didn't go to the daughter.
Right.
And they thought that was important, whereas the Supreme Court didn't take that view and said you can't do that. And the reason why the charities, I think, probably argued it was because they don't want that sitting on a case where it says you need a connection to the charity of some sort. Because most of us, we're giving to charity, you might have a connection if someone's died, Macmillan Nurses or whatever. But a lot of people pick 4, 5, list them all, Donkey Sanctuary, whoever it is. No connection, but I just like the idea of it. Whatever it is. Or I'm covering my backside, so I'm going to give something to every religious charity, all 7 or 8. And I'll cover all bases, 10 grand to each of them. One of them's going to be right, hopefully, and away we go. So it's that kind of idea. So valuing it's really difficult. Really difficult.
There was a story in the brief where you talked about someone who was too generous for charity and they ended up giving away too much.
Yeah, that was sad, really sad, because this chap had provided in a will for his wife. This is the importance of keeping up to date with your will. And what he'd done is sat down, worked out how much his wealth was based on his investment portfolio. A big chunk of his money was that. And then he decided to give percentages to his wife and to charity. He'd worked out and sat down with his wife and said, if I give you 40%, for example, that's the house and a lump sum of cash, you're covered. I'll give the rest to charity. He died about 5 or 6 years later, and the portfolio had dropped to a point where 40% of the entire estate didn't even cover the property. So as a result, the charity was picking everything up. And if we hadn't have interfered, she would have had to sell her house. Exactly not what her husband, late husband, would have wanted. But that's just because they weren't keeping on top of investments and advice and checking, goes up, goes down, doesn't it?
Do they have to execute, if you've got something like a stock portfolio, do they have to execute it when you die? Or like you said, the value dropped. Can you not wait for it to, you know what, give it 5 years, it'll be back up. And then when it gets back up, sell it. Yeah. Can you do that? Or
that falls on, I don't want to put people off doing wills, okay, but as an executor, and I know I'm sitting here with you, don't you are an executor. Executors have personal liability for the estate.
Jeez.
So if you're holding the portfolio and it goes down while it's in your control.
But the duty is just to act in a reasonable way. So if it's sort of the Clapham Omnibus kind of idea is that you've got to sit there and go, what's reasonable in these circumstances? What you'll find most law firms is they'll instruct on big portfolios, they'll instruct the right people to advise on the right moment to sell, the right moment to pass on and do that. Others will just simply sell at the moment of death and we'll get what we get. What you're supposed to do as an executor is what's called preserve the estate for the benefit of all the beneficiaries. So you need to act fairly sensibly. If that means sitting on it because in 2 years there's no penalties and it's going to be sold, then you can turn around and say, well, that's what I'd like to do. Do you all agree, beneficiaries? At which point you cover yourself off and do it that way. But so there's flexibility. But again, conversations need to happen because if you've got one kid that's saying, oh, I need my money now, and another kid that's saying, no, let's sit for the 2 years, and the executor has to act in the best interest of all beneficiaries, so that's both, what does he or she do?
Can't sell half?
Yeah, possibly, yeah.
You do it, sell half and keep the other half.
Creatively try and do it.
If this is maybe a bit of a selfish question, but I like the idea of setting up some kind of like trust that then carries on for centuries. So in like 500 or 600 years, they're like living off the demo fund. Is this a thing?
And they'll be asking, who was this?
Yeah. They'll know. They'll know. Like every time they access it, it'll be my face. Like, it was me.
It was me. It'll be AI demo. So you can't have it.
Enjoy that. But
are you here again?
Is that a structure I can set up? Yeah. Even if it's got like 10 quid in it.
I've just literally having the same conversation with my wife yesterday about, for our kids, the same thing, is that it's a legacy point, isn't it?
Yeah, and then they can take 3% a year or 4% a year and it stays invested.
Point your trustees. I mean, even better than that is you can set up in life and you become the trustee. So you can be the trustee of your own trust, but in the generations to come, I always quite like the Damo Family Settlement Trust. It's got a nice, it is a legacy point. Maybe it's ego, but I don't know what it is, but I like the idea of it because I think it demonstrates that somebody somewhere along the line has taken a view that actually I'm going to provide 4 generations to come. I'm going to be careful about this and do it. That's that discussion you can have with your parents. Let's create something like that.
Yeah, like a legacy that feeds through that anyone within the Akerele family can benefit from and no one can squander. Yeah, like, that's the point, isn't it? That my son doesn't just like destroy it. And, we were talking earlier about a fund. What was it called again? It's like the UK fund or something, which was set up by a random donator. He donated £500,000 for the purpose of paying off the national debt. Okay. And it was donated in the 30s or the 40s, post one of the wars when there was like a plea to millionaires to leave money to the state in their will. So he left £500,000 and he said, you can only use it to pay off the national debt. It's worth 600 million today. It's never reached the point where it's become enough. Wow. And now they're going through the courts to say, can we just use the money? But he was like, nope, only if it clears the point.
Well, it's a trust is clear.
So the debts just kept going and going. I think it's called the UK fund or the Wealth Fund or something. And it's like, it's a charity and what? Sorry, the National Fund. Look that up. Like it's fascinating, and they report all of what it does and its activities, and it's just building and building and building.
I wonder if they lend against it.
Yeah,
they've got to be doing something with it.
Yeah,
you got to be watertight, haven't you? Because my son would figure out a back door to that. Like, he would be in there in a second.
Excuse me.
Miss Screws. You just get that. Yeah.
And the hard thing, of course, is that time doesn't stand still, does it? No. So needs and it's just going to change over time. So it needs to move on. So settlements do get wound up eventually, but there's nothing to stop you. I think lifetime creating that kind of family discussion is a good idea, because then you start talking about, don't pay it to me, don't pay it directly to the kids, pay it into that settlement trust, because that's set up for them. And they'll your parents will like it as well. This idea of, if you're very clever, put it in their name. It's the so-and-so settlement trust.
Yeah.
So they get the kind of feeling and help that, I'm providing. And because it's true, they are providing. The boomers and the Gen Xers have got that opportunity to
They've got that
leave a
amount of
legacy.
money as well.
Leave a legacy.
Because if you have like £1 million in assets, you can probably draw like 30 grand a year off that for a pretty long period of time.
But you can be a beneficiary. You're not losing the right to take capital out. So you're not going to be in that situation where I put it all. It's not like universal wealth. You probably heard about universal wealth is a big scam scheme that they told everybody, put all your money into trust, your property, your own house into trust. It will shield it against everything, and of course it doesn't. And when they try and sell their property, of course they hadn't realised that they don't own it. The trust owns it, and they lose all their principal property relief on tax. So suddenly they're paying CGT on their own home, selling it. So we managed to get sort of orders rewinding that out, but that kind of situation needs to be managed. It needs to be managed. I think, for me, the way to go is trusting life and talk with your family. Even if you don't set it up, even if it doesn't happen, it's provoked a conversation that says, we as a family have talked about this. So it's not just about you giving to me. It's about planning for the future.
Yeah, plan for the family. Get yourself a will and try and have a conversation with the family about legacy and planning.
Legacy.
Do we think we got enough there? Yep. I don't know what the time is. Yeah, you tell your dad that you want to start like the Kerala fund. He's going to love that, mate.
He will love it.
It's a way, isn't it? I just think it's a way. Don't make it about death. You're not making it about death. You're talking about actually making him immortal.
Yeah.
You are, isn't it? Or you can, if you be clever, call it the, I don't know your father's name, but so-and-so Immortality Trust Fund.
Immortality Trust Fund. Yeah. That's what Damon will call his, because he wants to be compounding forever. He thinks he's going to live forever.
Get out fund. Don't touch this shit.
Yeah.
Mine.
Yeah.
Mine.
Yeah, I would call it something funny.
Yeah. Told you I was ill fund.
Yeah. Told you I was ill fund. Yeah. That's funny. I think the key thing I want you to take away from that episode is get a will. 50-60% of people haven't got one. Another thing that I think you should consider is proper protection in terms of insurances. And we had a conversation here with someone that's an expert in things like life insurance. So watch that next.
A little bit scary, but it's got to be done.
Yeah, you're all going to die, so just get on with it. I ain't know.
Yeah, I know. You
got that AI coming, mate. We'll be like the bionic man.
Yeah, with your fund for life, just compounding forever.
Yeah.
The Damien Fund legacy.
Yeah.